I buy gold because I'm afraid that because of quantitative easing and debt and deficits and negative real interest rates, that the price of gold, measured in nominal terms, which is to say US dollar terms, goes to $6,000 or $7,000 or $8,000. And by the way, I'm not looking forward to that. The gold price goes up, you're going to do stupidly well over there. But I own gold anyway because it allows me to sleep nights and stay calm. I didn't buy gold because I thought the gold price was going to go up. I had other speculations. I bought gold as insurance.
Recently, there has been a noticeable spike in the fluctuation of gold prices, resulting in robust returns over the past few months. The ascent of gold has been fueled by the diminishing value of the dollar, which dropped approximately 3% against a group of 6 major currencies in November, enhancing gold's affordability for investors using different currencies. On Monday, gold hit a 6-month peak, propelled by the US dollar's weakness. Additionally, the metal's value received a boost from positive sentiments about the US Federal Reserve potentially easing monetary policies sooner than predicted. Gold crossed the $2,000 threshold, soaring past the vital $2,100 mark, thus positioning itself to rival historical highs. It recorded its highest monthly closing ever in November. A significant driver behind the surge in gold prices was the worldwide drop in government bond yields. ING anticipates gold to continue setting new records in 2024, with an average price around $2,100 per ounce in the last quarter, exceeding its all-time high. Rick Rule, president and CEO of Sprott U.S. Holdings, is taken aback by the upcoming major shift in gold prices. Contrasting with his previous beliefs, he now sees gold as a safeguard and a dependable source for immediate funds when needed. Gold retains its value amidst financial instabilities and geopolitical unrest. Often seen as a bastion during times of economic or political instability, gold stands immune to the risk of devaluation. Unlike fiat currencies or other assets prone to credit risk, gold serves as a safe haven in various ways, maintaining its long-term worth despite short-term price volatility. For Rick, minor fluctuations in gold prices, such as the rise from $1,950 to $2,100 per ounce, are of minor consequence. To him, the enduring reliability and security of gold is paramount, overshadowing fleeting price variations. Up next, we will show clips from Rick Rule's interview with Paradigm Press.
I do believe that a sea change is coming in the gold price, which is not something I've believed in for a long time. I also need to tell you that I own gold now. I began buying gold about the year 2000. A financial planner would look at me and say, "You're the largest shareholder of Sprott, a brand name for precious metals. You don't need to own gold. If the gold price goes up, you're going to do stupidly well over there." But I own gold anyway because it allows me to sleep nights and stay calm. I didn't buy gold because I thought the gold price was going to go up. I had other speculations. I bought gold as insurance. I bought it as good liquidity. And when people say to me, "Well, the gold price has gone nowhere. When is the gold price going to go up?" I say, "Well, I bought gold for $255, $260 an ounce in 2000. It's almost $2,000 now. So when you ask me when the gold price is going to go up, I have to say to you, the year 2000. 20
Thanks
years
to
ago.
Gordon Brown, right?
Yeah. What do you want? I mean, you've seen what, a 7-fold, 8-fold increase in the price of gold, and somebody's asking me when it's going to go up? That's funny. I don't own gold because I think it might go from $1,950 an ounce to $2,100 an ounce. I don't care about that. That's absolutely irrelevant to me. For that kind of money, I'd rather stick in banking, a business I know. If you think about gold as insurance, you understand its true function. Do you want to collect on life insurance, Sean? If you collect on your auto insurance, there was a wreck. Housing insurance means that your house got burned down or somebody broke into it. That's the way I regard my gold. My gold stocks are different. They're businesses. And the way they have been run for 50 years, they're pretty lousy businesses. They were run on the lessons that the industry learned in the 1970s. In other words, they are built to capitalize on the leverage of the gold price rather than to be efficient. It's interesting to note, Sean, and this is horrific. In the period 2000 to 2010, a wonderful run of the gold price where it went from $250 to $1,800 or something like that, of the Philadelphia Gold and Silver Index, the XAU, free cash flow per share fell The price of the commodity went up sevenfold, and the financial performance of the industry deteriorated over 7 years because the industry was structured around the leverage of higher gold prices rather than around corporate efficiency. The industry is now tarred with that brush. The investment community assumes that these guys are at best morons or at worst thieves. But the reality has changed. The investors who own gold shares are demanding corporate performance. The managers that delivered that sterling performance have been allowed to pursue other employment opportunities, selling cars or whatever it is that they want to do. So the industry is in better shape, frankly, now than it was then. The industry has other challenges, but the other thing is that the industry is no longer priced for perfection. It was common to see gold mining companies priced at 1.8 to 2 times the net present value of their future cash flows at the then prevailing commodity prices. You're seeing them now priced at 0.8 or 0.9 times the net present value of the future cash flows at today's gold prices. And I think gold prices go up.
During Friday's North American trading session, silver prices soared, touching a 6-month high of approximately $25.46 before settling at its current price. Rick offers a unique viewpoint on silver compared to gold, emphasizing its lack of consistent, safe haven appeal during times of uncertainty. He views silver primarily as a speculative asset, with its value being influenced not just by intrinsic worth, but also by current market trends and stories. He observes that the silver market often mirrors gold, particularly swayed by buyers motivated by fear in times of economic unpredictability. The U.S. federal debt, as per the U.S. Treasury Department's report on October 26, 2023, has escalated to a staggering $33.67 trillion, marking an increase of $2.27 trillion since the temporary suspension of the $31.4 trillion debt ceiling initiated on June 3, 2023, due to expire at the start of 2025. Rick points out the government's considerably tighter financial restraints in comparison to the 2008 financial crisis period. He voices concerns that a crisis of confidence might trigger a credit and liquidity crisis. Let's return to the interview for more insights.
I don't see silver as an insurance asset like I do gold. I see it as a speculative asset.
Right.
And in my experience, a precious metals market is led off by gold. It's led off by the fear buyer.
Right. Okay.
Once the momentum has been established, once the narrative has been common, silver moves further and it moves faster. But that happens in the middle of the market, and the market hasn't started yet. This is probably a good time for speculators to focus on silver stocks because they have no competition. You know, Warren Buffett famously said, buy straw hats in winter. Well, in terms of the silver equity, man, you are in the winter. People who were discouraged by the collapse of the mini boom in 2020, 2021, the Reddit boom in silver, regard silver, perhaps because they're poor spellers, as a 4-letter word. There is nothing I like as a speculator so much as an asset class that has disappointed the faithful. I'll give you a few historical examples. In the great 1970 silver bull market, which I don't think will ever be, the price of Coeur d'Alene mines advanced from 10 cents a share to $65 a share. Unfortunately, without me. Going forward, however, to the silver bull market of the early part of the decade of the 90s, we were part of constructing both Silver Standard and Pan American. Those stocks rose from 74 cents and 50 cents respectively to in excess of $40 within the 6 or 7 year time frame. That is what happens with a well-constructed but out of favor silver stock when they return to favor. That doesn't mean that with visions of those, sugar plums in your mind, that you put your whole net worth into speculative silver stocks. It means that you put 2.5% or 3% of your portfolio into them in hopes that they become 30 or 40% of your portfolio. A recipe for the replication of what we experienced in 2008. The problem with that, well, that's a problem in and of itself, but a much larger problem is that the government itself has much less rope to push than they had in 2008. The on-balance sheet obligations of the U.S. government now exceed GDP. which is to say the U.S. government owes $33 trillion on balance sheet. Admittedly, only 26 trillion after the Fed's own balance sheet, which is to say after quantitative easing, or more properly counterfeiting. But a bigger problem is the off-balance sheet liabilities, the net present value of entitlements, Medicare, Medicaid, Social Security, which is to say old fat bald guys like me. That number in the United States exceeds $120 trillion by the estimates of the Congressional Budget Office, which is to say our government is much more illiquid and much more encumbered now than in 2008. So the ability to afford fiscal stimulus is much lower. So I'm afraid of a crisis in confidence sparking a credit crisis, sponsoring a liquidity crisis without the government's ability to spend, print, and borrow our way out of it. Do I know this is going to happen? No. Do I think it's going to happen? Unfortunately, I actually do think it's going to happen.
Wisdom Tree's projection indicates that gold prices are poised to ascend throughout 2024, potentially reaching $2,090 per ounce by the third quarter. The firm's optimistic forecast suggests the possibility of gold prices soaring as high as $2,300 per ounce. Drop your predictions about the upcoming shifts in gold and silver prices in the comments section. Don't forget to hit that subscribe button for the latest financial news and trends on our channel.